Hey, everybody, welcome in. Listen, is China shifting away from U.S. energy products? So, this has been a key question on a lot of people's mind, especially as we've come into a new administration as well as tariffs. So, we're going to take a look at 2025 versus 2024 and take a look at actually what the data is telling us. So, let's go ahead and dive in here. So, China's pivot, the collapse of U.S. energy exports in 2025. So one thing to look at is that there's multiple energy products that China imports from the US: crude oil, LNG, LPG, and coal. There's also multiple other products such as jet fuel, such as propane, such as butane, and there are significant headwinds to all of them. So in crude oil, it went from a top 5 destination to zero imports. LNG from a major buyer, one of our core buyers, to a complete halt. On LPG, from a strong market to a 30% decline. Coal, also a sharp quarterly decline. So the tariff timeline in February 2025, what's interesting here is that the tariffs came into place in February 2025, or at least that's when a lot of the vernacular. Initial tariffs included a 10% on crude oil, 15% on LNG and coal, and then there was a lot of retaliatory. Yeah, I always mistake that word. Retaliatory. March, April escalation. Tariffs raised over 100%, and Q2 a complete halt in energy flows. But what's interesting is LNG. Let's go back to this slide. LNG. They were a major buyer, probably I think 3 or 4 BCF to zero in, but that zero was in January. This was before anything was discussed as far as tariffs. So China was already preparing to pivot away from the US in 2025. So the tariffs are one possible reason. There can be a load of reasons. It could be that they have stronger alliances with Russia, and as Russia's sanctions were being impacted on the Western countries, China just started taking a lot of discounted product. So on crude oil, you can see that we had a significant 2024 and 2025. In January, 269,000 barrels a day to 2025, 134. And then in 2024, February, 389 to 149. Then in March, 190 to zero. So that's a pretty strong statement. Now, LNG, an even more abrupt stop. So they were a consistent buyer through 2024. Exports ceased entirely in early 2025. Actually, it was zero in January. There may have been some in February, but January was zero. And the billion cubic feet in 2024 was 212. So that's less than a BCF a day. However, you can look at the various months, and there are several months it's multiple BCF a day. And 2025, zero. So LNG is a complete stop. So on LPG, this is resilient but fading. So let's take a look at propane and butane. Propane in 2024, we averaged 323,000 barrels a day, and in 2025, 270,000 barrels a day. So not quite fallen off the cliff, but this is significantly backing things up. Now, butane doesn't produce as many barrels out in the production space as propane, but 2024 average was 22,000 barrels a day, and January through June is 16,000 barrels a day. So the key is there's a lot of barrels here that are disappearing from the US export mix. So we can go back here to crude oil, significant, LNG, significant, LPG, even though it didn't go to zero or didn't go all the way down. The drop from 323 to 270 is significant. So coal, we had a sharp quarterly decline in the first quarter. So you can look at this as an indicator that China is shifting away from the US energy products. So refined products, there's kind of a minimal impact. Of course, they weren't really importing that much on the refined product side, but it's sporadic and negotiable trade throughout the years. Diesel, minimal exports, most months are zero, peak 35,000 barrels a day in April of 2024. So there's minimal exports to China on diesel. Gasoline and jet fuel, virtually no exports. The distances between the two, there's some local refining out in Asia that they actually capitalize on, kind of from Russian refineries, quite frankly. Marine bunker fuel, no significant trade there. So the strategic shift, this pivot is forcing buyers to source energy from alternate suppliers. Now, one core is Russia. So they are importing a lot more from Russia, and that is strengthening a lot of the geopolitical ties. You can start to think about trade partnerships realigning, especially as part of the tariff move or carousel. There's been a lot of changes in that, and on the geopolitical front, Peter Zion has some real interesting thoughts there. I'm not going to say he's right, wrong. He forecasts the future, but he has a lot of density behind what he's talking about going into the future. So China is pivoting away. Domestic production, they are trying to get at more domestic production. They are importing more from Russia and Central Asia, and they're looking at alternative suppliers. So what does this actually mean? It's redrawing the global energy trade map and the trade war impact. And this has become a very significant change in alliances. And you can see that from some of the trade negotiations that were happening. Part of the US and EU, the current presidential administration aligned with the EU to buy more energy products from the US. Most of it is going to be in LNG. However, you can see that as China shifts out, we in the United States, as an exporter of energy products, need to forge new alliances. And some of those alliances are merging, such as India, such as various other countries in Asia, as well as South America and Africa. So these are all being redrawn, rewritten, and these are policy driven. And there is a global impact, and this is happening very rapidly. And listen, I ask interesting questions. We ask. I'm flying solo today, but me and my partner Bill, we talk through various things on the energy markets. Some of which are macro, some of which are micro. But if you are serious about energy products or you're interested in energy products and you need insight into the energy markets, there is a link down below to Rogue Radar for 14-day free trial, and that gives you access to, I'm going to show you, and it'll take you to this page, and you just click this button, and then just click this button, and then you'll order. And it's a 14-day free trial. So what you get inside is you get a video that talks about the market and typically natural gas, crude oil, ultra low sulfur diesel, plus you get access to 2 PDF reports each week. And our marquee is really having a crude radar and a natural gas radar, which every day gives thoughts on the market. So it's just my thoughts on the market, as well as today's update based upon news and various factors. You have a market summary as far as technical analysis, fundamental analysis. Like, the reason I wanted to explore this topic is because of this right here. When we were looking at this, I was looking at our imports and our exports. And what I was noticing is our net imports are down versus the 3-year average. So I really wanted to start exploring, well, why is it down? Who is uh, who is the benefactor of that? Who do we import less from or export more to? So these are the questions that come into play. So every day, this gets updated with news, and it reads OPEC articles, and CFTC, as well as news analysis. So this goes through 36 articles for crude oil, and it analyzes them and comes up with a sentiment. So this gives you different factors. When you look at various markets, what you can evaluate is these updates are going to be narrative based, and these updates, technicals and fundamentals, those are often key contributors to price direction. Then international, OPEC, CFTC, as far as what hedge funds are doing, and so on and so forth, news analysis, and we even have, all the way down here, AI analysis. So machine learning. These these come out every single night, and these run every single night and review the market and review what is going on. So listen, it is a 14-day free trial. It does cost $89 a month for Rogue Radar, and for those that want to take the next step, we do have another tier, Rogue Edge, which opens us up to our Discord channel, and which means you can ask questions and we'll get back to your specific questions. So Rogue Radar is kind of giving you the view of the market, an AI summary of the market, our summary of the market, and then you can evaluate for yourself where the market may be going. Well, now, we're not financial advisors. We do express our opinion, but that is our opinion, and it's not trading advice. We do contribute to people's insight so that they can make smarter decisions in energy. So listen, thanks so much for being here. The core key lesson is that China is reducing imports from the US, and that is going to be a significant shift for US exports. Now, bear in mind, just 10 years ago, the US was not exporting much crude, much LNG, hardly any LNG, or other products. So over the last 10 years, we've become an exporter. So these partnerships and lack thereof, if China disappears from our export mix, that is going to change things significantly. So listen, thanks so much for being here. If you enjoyed this or got anything out of it, leave us a like, leave us a comment, let us know. And if there's something you want to hear about, let us know, and we'll talk soon.